that little plastic card in your wallet. How did it become so powerful that billions of people around the world can hardly imagine shopping without it? Even more surprising, the credit card was born because of a forgotten dinner bill. Who invented the first credit card? Why did people begin trusting a plastic card instead of cash? What is the real difference between Visa, Mastercard, and American Express? And why, every time you pay with your card, do computers in different parts of the world start working together within seconds? Today, we'll uncover that incredible story. Today, you can pay for groceries, restaurant meals, online shopping, or airline tickets in just a few seconds using a card. But only a few decades ago, most people around the world relied entirely on cash. The credit card was more than just a new payment method. It transformed the way people shop, changed the banking system, and reshaped the global economy. In today's documentary, we'll follow that remarkable journey from a simple idea to how the credit card became one of the world's most powerful financial technologies. One evening in 1949, businessman Frank McNamara went out to dinner with friends at a restaurant in New York. After the meal, he realized he didn't have enough cash in his wallet to pay the bill. It was an embarrassing moment. That very night, he came up with a new idea. What if there were a card that could be used to pay the bill immediately, and the customer could repay the bank or issuing company later? This simple idea would begin transforming the global financial system within just a few years. In 1950, Frank McNamara and his partners launched the Diners Club card. At first, it could only be used at a limited number of restaurants. During its first year, only about 200 members used the card. It wasn't even made of plastic, it was made of paper. Yet it was revolutionary. For the first time, people could pay for a restaurant meal without carrying cash. This marked the beginning of the modern credit card era, but that's not the whole story. Because within just a few years, banks took this idea to an entirely new level, one that would permanently transform the global economy. The success of Diners Club quickly caught the attention of banks. They realized that the future of finance would not depend solely on cash. In 1958, Bank of America introduced the Bank Americard. It became one of the first major bank-backed credit cards in history. At the beginning, thousands of these cards were mailed to people across California. It was a bold experiment. For the first time, many people began shopping without carrying cash. But the early days were far from easy. Fraud, billing errors, and unpaid balances quickly became major challenges. Even so, banks recognized the enormous potential of this technology. But the biggest transformation was still ahead. In the 1970s, Bank Americard evolved into a much larger international network. It was later renamed Visa. Meanwhile, several banks joined together to create another competing network, which later became known as Mastercard. Here's something very important to understand. Visa and Mastercard do not issue credit cards themselves. Instead, they operate payment networks. Your card is usually issued by a bank, while Visa or Mastercard provides the infrastructure that makes transactions secure and fast. This system has connected millions of merchants, banks, and ATMs around the world into a single payment network. Today, when you use your card anywhere in the world, your transaction can be securely verified within just a few seconds. But an even bigger revolution was on the way. In the next part, you'll discover how credit cards evolved into modern plastic money, how chip technology, PINs, and contactless payments transformed the way we make transactions, and why every time you pay with your card, servers across multiple countries begin working together within seconds. The earliest credit cards were made of paper or thick cardboard, but they wore out quickly and were relatively easy to counterfeit. In the 1960s, plastic cards began gaining popularity. Soon after, magnetic stripes were added. Now, simply swiping a card through a payment terminal allowed transaction details to be verified within seconds. Later came EMV chip technology. This tiny chip generates a unique security code for every transaction, playing a crucial role in reducing fraud. Then came contactless payments. Now, simply holding your card near the payment terminal completes the transaction almost instantly. A small plastic card gradually evolved into one of the world's most advanced financial technologies. But behind every payment lies an even more complex system. When you use your card at a store, the entire process is usually completed within just 2 to 5 seconds. First, the payment terminal securely sends your card information to the bank. The information is then routed through a payment network, such as Visa or Mastercard, to the bank that issued your card. The bank verifies several things: whether the card is valid, whether you have enough credit or funds available, and whether any suspicious activity has been detected. If everything checks out, an approval message is sent back through the same network to the merchant. Throughout this process, servers, security systems, and data centers located in different parts of the world work together simultaneously. All you see is the word approved. But behind those few seconds operates one of the world's most complex financial networks. But the most important question still remains. Credit cards have made life much easier, whether it's emergency purchases, online payments, international travel, or business transactions. They play an important role in everyday life. Many cards also offer cashback, reward points, and travel benefits. But these advantages come with a significant risk. If you don't pay your bill on time, interest charges can increase rapidly. Gradually, even a small purchase can turn into a large debt. That's why many financial experts say a credit card is a powerful financial tool, but if used irresponsibly, it can become a serious financial burden. Even today, millions of people around the world struggle with excessive credit card debt. Today, technology is evolving rapidly. Smartphones, digital wallets, smartwatches, and contactless payments have become more popular than ever. Many people no longer carry a physical plastic card. Instead, they simply pay with their phone or smartwatch. But there's one important thing to remember. Even when you pay with your phone, in many cases, the transaction is still processed through your credit or debit card network. In other words, plastic cards may become less visible in the future, but the technology behind them remains a vital part of the global financial system. In the years ahead, AI, biometric payments, and digital identity systems may transform this technology even further. Perhaps the most remarkable fact is this: the credit card used by billions of people every day began with the embarrassing moment of one businessman who couldn't pay for his dinner. From one small problem came an idea that permanently transformed the global economy, the banking system, and the way people shop. Sometimes history's greatest changes begin with the simplest of moments. Just imagine if, over the next 20 years, every payment is made using only facial recognition, fingerprints, or artificial intelligence. Will plastic credit cards become a thing of the past? What do you think? Will we still be using credit cards in the future? Or will an entirely new technology replace them? Share your thoughts in the comments. And if you enjoy discovering the hidden stories behind history, economics, technology, and the everyday things we use, be sure to subscribe to the channel. Because in our next documentary, we'll uncover another incredible truth that you may have never heard before.